Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Monday the 8th of April 2019. I'm Darren Sinden, and you can follow me throughout the day on Twitter by using @ds_Pepperstone. Okay, let's kick off with a look at the overnight changes and price moves to be aware of. And as it's a Monday, of course, we'll look at things on a weekly basis. First of all, let's have a look at the British pound against the US dollar. Up on the day, up by 0.23%, but down over the last 7 days, down by a quarter of 1% over the prior week, and up by 0.6% over the course of the last month. So sterling volatility seems likely to be with us for a while yet, and of course that's principally being driven by Brexit and the events around that at the moment. Elsewhere, the Kiwi, the New Zealand dollar, down by just over 1% against the US dollar last week. And if you look further to the right, we can see it's down by 1.41% over the course of the last month, and down by a whopping 7.8% over the last year. So a continuing trend of weakness in the Kiwi there against its US rival. The Canadian dollar also lost ground to its US rival over the last 7 days, down by 0.53%, the loonie there against the US dollar. Elsewhere, the Brazilian real is taking money off of the US dollar once more, gaining by 1.29% against the US currency, although that's really only a modest dent in the in the annual losses that the real has suffered over the last 365 days. Dollar index for its part, unchanged pretty much over the course of the last week, up by 0.01%, down modestly in early trade today, down by 0.15%, but really standing still, perhaps rather surprisingly after that better non-farm payrolls data on Friday. But let's see if dollar index decides to move in either direction throughout the course of this week. Can't leave the changes without flagging the cryptocurrencies. Bitcoin and Ether both up strongly on the week, up 28 and 31% respectively. What's interesting today though is that they're adding to those gains in early trade. So the cryptocurrencies down, but certainly not out as far as this rebound's concerned. Okay, what's on the calendar? Events that may move the markets today. Not the busiest calendar in the world. We've already had job advertisements data out of Australia for the month of March, a slight dip there in the number of jobs advertised. We've also seen consumer confidence data out of Japan, and we'll look at that in a bit more detail momentarily. To come at 6 a.m. GMT, we'll have trade balance data out of Germany for the month of February, a look at how the German economy has been performing, exports, imports, trade balance total, and of course the all-important current account surplus in Germany. How well is that German economy faring? At the same time, we'll have the Economic Watch's survey data for the month of March out of Japan, and that's very timely as we've had the consumer confidence data earlier, so a chance to see how professional Japanese economy watchers feel that the economy there is performing. And at 7 a.m. GMT, we'll have foreign currency reserve data out of Switzerland for the month of February. Another chance to look at how the Swiss bank has been faring in its efforts to steady the Swiss economy and keep a handle on the currency. At 08:30, we'll have Eurozone Centex investor confidence data for April, another sentiment-orientated study that shows how investors are feeling towards the Eurozone economy and the markets there. Then we pause until 12:15 for Canadian housing starts for the month of March, I should say. This is year-on-year data. And then at 12:30, building permits for the month of February will also be released from Canada. Because back into the US at 1400 for factory orders data for the month of February even. I think that's probably the highlight of the day's data. And then at 15:30, we shall have 6- and 3-month T-bill auctions out of the US as well. Okay then, breaking news and comment that's caught my eye overnight. And first of all, oil prices have rallied as a conflict in Libya escalated over the weekend, and rebels in the country are advancing on the capital Tripoli. Both Brent crude and WTI are up by around 0.4% in this morning's trade. Meanwhile, the US will look to increase pressure on Iran today, with the White House considering naming the Iranian Revolutionary Guard, effectively Iran's army, as an international terrorist organisation. I understand this will be the first time that a national army will have been named as such by the US if that goes ahead. Meanwhile, Japanese consumer confidence fell to just 40.5 in March, well below forecasts for a read of 42.3 and the prior reading of 41.5. And of course, this was the latest in a series of disappointing data from Japan over the last couple of weeks. Right then, food for thought and something to take away with you into the trading day and beyond. And why not think about this? China continues its love affair with gold. The country has expanded its gold reserves for the fourth month in a row. Reserves are now up to 60.62 million ounces, ahead of a figure of 60.26 million ounces released just a month ago. China has added more than 11 tons of gold to its reserves in the last month and is on course to become the world's largest holder of the yellow metal if this pace of buying continues across 2019. The chart on the right hand side just is a simple chart that shows the gold reserves held by the People's Bank of China and how they've expanded over the last 4 or 5 years. And as we can see, they've been picking up again recently. Of course, the biggest jump here in 2015 when they shot up dramatically, but it just shows that the Chinese can and have in the past added substantially to their gold reserves. The buying has yet not been enough, of course, to buoy gold prices, which have slipped from their recent highs, but perhaps this is a trend that may have an effect on that going forward across the rest of the year. Okay, it's risk warning time. Please do take a moment to read this risk warning. Trading CFDs and foreign exchange on margin can be a risky business. If you're in any doubt about those risks or the suitability of leveraged products for you, then please do contact your Pepperstone account representative. And as I say, do take the time to read this risk warning thoroughly. Thank you very much for your time today.